That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
The road trip across America continues. Hi, I'm Don McDonald in beautiful Durango, Colorado. On the, I think it was the Los Alamos River. I don't know. There's a river out there. And Tom is in the studio in Seattle, and we're here to do something extraordinary. We're here to help you make your life better in the future. That's our purpose, to make life better by helping you plan for what we hope is an inevitable future. We hope you make it to a really old age, but to do that, you gotta save, invest, and deal with money probably a lot better than you have. So here's what we'd like you to do. Give us a call with anything money-oriented going on in your life at 855-935-TALK, 855-935-8255. I'm Don McDonald, that's Tom Cock, and we are thrilled that you are listening. We hope you'll continue to do it for the, next couple hours maybe.
And your people are incentivized to call today, correct?
We are doing now here's the deal. We are doing a couple of classes, new class. It's called Three. Yeah. Real Retirement Roadmap, and we're taking it all around the Puget Sound region. We're heading down south to Tacoma. Mm-hmm. We don't go down to Tacoma very often.
Well, because they don't invite us there often for good reasons.
Well-known
reasons, but yeah, okay.
Well, I mean, okay, that little dust up with the Tacoma Dome, that you made fun of it for being made of wood or something. And then we're going to be up in Linwood, and then we're going to be over in Bellevue, and you can get tickets for these classes online at talkingrealmoney.com. It'll be $15 for the door. You can get it for $10, or if you'd like to attend one of these classes and find out how you should be managing your money for retirement, it's called Real Retirement Roadmap. If you call and ask a question during the course of the show, Derek, who's taking the calls, will get your name and your phone number. Then we will call you next week to get you set up for 1 or 2 tickets to one of these upcoming classes.
Absolutely
in September.
Free.
Free.
Yeah, and
yes.
if you're like a lot of people that I've been talking to lately that are like, well, the market's doing this and it's going down and I got to do something, we'll show you how to deal with all that at the class where you don't have to do anything. That's the biggest problem I see regularly. Feel like I got to take some action.
Yeah, you feel like you have to do something. Yep. Then you start worrying that your future's going to fall apart. And you start thinking about doing dumb things like gold or cryptocurrencies or, I don't know, timing the market. We've got a scientifically based approach to managing money. It is really based on a lot of grand research, and you're going to learn that. Plus, you're going to learn how to find a great advisor and how to manage the money once you're in retirement so you don't run out of money.
Evidence. But where does most of the money for people living in retirement come from? Where's the biggest check come from?
Social Security.
A third of us say it makes up 90% of their retirement income. 50% say it makes up more than half. So it's the biggest part, and most of us are making bad decisions about Social Security. The new number is now, the new survey out, only 4% of retirees wait until age 70.
What?
4%.
Seriously?
4%.
Wow. Apparently they're not getting the message that every year you wait, you get 8% more money.
Plus inflation.
Oh, that's right.
Yeah,
plus inflation.
Plus the little cost of living increase they put in there. Yeah, so this is just out. And the number, according to this survey, is U.S. retirees would be able to generate an additional $3.4 trillion in income if they optimize their decision about Social Security. Let me say that again. $3.5 trillion. I don't even remember how many zeros it is. It's a lot of zeros.
That's more zeros than you could probably write.
It's $111,000 per household. Go ahead.
Let's give them the benefit of
okay.
it. Maybe they're doing it for the good of America.
Oh, I see. They're just trying not to spend down Social Security
Yeah,
too
they're
quickly.
trying not to spend down Social Security. So they start
an
early.
altruistic thing. Okay,
Yeah.
I didn't say that. It's a not-for-profit thing. I got it. Okay, that's very kind of you.
I try to think the best of people.
But, I mean, this is one of those places where I think you probably should, since it's your retirement, be a little selfish. It really should be about you.
And here's one of the problems it's one of our behavioral biases. You know, we think what if I die?
Yep.
This is
we had the guy call us a
the
couple
what if
weeks ago.
scenario.
Remember, he called and said, "I get hit by a bus." Yeah, that you will end up with less money.
Right, but
Guaranteed.
you could get hit by a bus today and you'll end up with a lot less money.
True, too.
Your
Right.
family will end up with less money. You have to count on the fact that you play the odds, and the odds are that in this day and age, if you live to the age where you can collect Social Security, 65 years old.
62.
The odds are,
yes.
well, it's 65-ish for full benefits.
Correct.
The odds are good that you're going to live into your 80s, and that's when it starts making really good sense to wait to take Social Security. You're going to learn about that at the class, too. So get your tickets for free if you give us a call at 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Oh, I want to thank the Fairfield Inn in Durango for having fast internet.
Yeah, boy, they're really moving along there.
It's great internet. At some of the hotels I was in, it's like 1 megabit up and down, and you couldn't do anything. I was hooking up to T-Mobile.
Yeah,
or
you ran an
Verizon.
antenna across the country or something, right?
Oh, and they have really fast internet here. It's really good.
All right,
I
well
appreciate
done.
it. Thanks, Fairfield. And these new Fairfields, I like them. And I'm not getting anything for saying that either.
Is this okay?
They're really quite nice. I would have preferred to be in my Airstream. But that didn't work out.
Your Airstream is still residing in Virginia, waiting for its owner to come back and claim it at some point.
It hasn't even called. It's not lonely at all. It doesn't
Apparently
miss
just
me.
sits there.
855-935-TALK is our phone number.
Speaking of not calling.
855-8255. Call Derek. He'll
was
get
too
your
easy.
information. We'll answer your question on the show, and you'll get tickets to one of our upcoming
But you
classes
don't
in
have
September.
to go, by the way. So
You
can
don't
call.
have to
You
go.
could just call and ask a question.
Oh, yeah. But
right.
just in case you want to go,
Yeah.
it's going to be free, which is better than $10.
There you
or
go.
15 at the door.
So, but isn't
Last
it 10?
week-
Isn't it 10 and then early bird is less than that right now?
No, it's the early bird is 10.
Okay, I didn't know how that all worked.
15 at the door.
Okay, 855-935-TALK. You were saying
I was saying.
yes.
I started out Friday morning doing the market reports on Como.
Yes.
I did. And the market was up a little, down a little. And then I got in the car and drove for the day, visited Mesa Verde National Park.
Almost ran into a tree when you heard the numbers.
Because I don't. There's no cell up there. Got down to Durango, turned on the TV.
What?
The Dow is down 600 points. The S&P 500 off 2.5%. The Nasdaq off 3%. And I went,
Excuse me?
what happened?
Yeah.
Now I'm not going to go into what happened, because if I go into what happened, it forces me into a political conversation that I don't want to have.
Yeah, because the last time you did that, somebody got really mad.
Somebody yelled at me.
Oh, man, did they ever. You think people are mad at me about the small town thing that really climbed on you for the politics.
I did, because, but whether you like it or not, the market is reacting to political
That
events.
would be true.
That's what it
Yes.
does. But I want to put this in perspective. We need to put these things in perspective. This month, the past month.
This month being August 2019.
Yeah.
Okay.
The S&P 500 is off about 6%.
Which is,
now, it sounds terrible.
If you annualize that could be a pretty bad year.
Yeah.
6 times 12, I think that's somewhere
It's
over
awful.
70%. That would be bad.
But that's why I don't like you looking at numbers short term. I don't like it. Because if you step back just a little tiny bit and look at the market since January. And I'm using the S&P 500 as the market as much as I hate to do it because it's what people know. I'm not using the Dow because I think the Dow's the worst
30 stocks
measure of the market.
And one company can really change that up or down quickly.
But since the beginning of the year,
right?
The Standard & Poor's, the 500 stocks in the Standard & Poor's 500, if you invested on January 1st, and even though you just suffered through a 6% monthly decline,
yes, how
much money have you made for the year?
13.5%.
Thank you.
All right. Feel better now?
13.5%. But it's a great year.
Oh, it's a great year. But what if you had just taken our two-fund portfolio and put 60% in stocks, 40% in bonds? Because almost nobody I know is 100% in stocks. Very few people. Had you done that,
Yes.
You're up over 12% year to date. Because the bond fund is up 9%. The total bond fund is up 9% year to date through Friday. Crazy.
And not only that, but in that portfolio, you own international stocks and U.S. stocks. So, wow, you're well diversified and you did 12%. 855-935-TALK's our number. Give us a call. We're trying to make this make a lot more sense. People call us all the time and say, well, the market's way down. What should I do? Well, it's not way down. You see, you're wrong. You're getting caught up in this immediacy. Another behavioral bias, the immediacy bias.
Recency, immediacy, yeah.
Recency, immediacy. We look at what happens today and we project that on into the future ad infinitum. We just go, well, it's bad today. It's always going to be bad.
And let me add something else, because this was very well played up. I'm sure you paid attention to this at the end of the week, that economists are saying there's a 7 of 10 chance it will be in a recession in the next year and a half or 2 years. Now, what is the track record of economists calling a recession?
Bad.
It's horrible. They have the absolute worst. A coin flip would be better. They have a horrible track. In fact, our friend Dan Solon went online and showed the survey of how awful they have been over the last 50 years. Harry Truman once said he wanted economists with one hand because they would say, on the other hand.
If you laid all of the economists in the world end to end, they wouldn't reach a conclusion.
That's even better. Anyway, so you can't get caught up in that stuff. You can't listen to it. I was saying that about the class, but I'm saying that in general. You need to have a strategy so it doesn't matter what the market does on Friday or Monday or Tuesday, whatever it does. It doesn't matter.
And it's funny when we talk on this show and in our classes and just in life, we talk to a lot of people about money. And it's so interesting to talk with those who've created a plan, whether they have, I'm not talking about our clients. I'm talking about people who use our two-fund solution, who are just building a diversified portfolio and hanging tight with it and rebalancing it. Every one of those people I talk with doesn't worry about the market.
No,
they don't worry about it.
They don't get up in the morning. In fact, that was one of the, and I want to say thank you, because that was a week ago that our clients came out to a little reception we had in our parking lot.
In our parking lot.
Yeah, which wasn't fancy.
How many people can get away with a parking lot reception?
And a bunch of people said, this really fits kind of who you guys are. And I want to thank them for coming. But the number one thing people said was, I just feel comfortable. I feel safe. I feel like I don't have to worry about that. There is no greater compliment in terms of what and I want to add one other thing. Thank you, clients. And they listen to the show a lot, too, by the way, because they do a lot of anecdotes. Thank you for being nice people. Because you know what?
They are nice
people.
They're
just nice people. So,
yeah, I talk to a lot of people.
So anyway, so thank you for coming, and thank you for being nice people, and thank you for allowing us to help.
And but I want to make this real clear. We're not saying that by having a diversified portfolio or by being a client of a firm like ours, any investment advisor anywhere, it does not mean you will not lose money. It does not mean that your money will always sit there and never fluctuate. You see, we are trying to change the paradigm, the way people think about money. You're going to lose money.
Yep.
That's one of the things that we honestly tell everyone. You will lose some money for a while.
But it's important to understand what that means. It doesn't mean it's lost and never comes back, number one. Number two, what we're talking about is volatility. Not loss so much as things go up and down. And you've been paid for the volatility that has been a part of the stock market for a very long period of time. That's the key.
Good point. We should change the word we use from risk to volatility.
I agree.
Because that's really all you're getting in this kind of a portfolio. 855-935-TALK is our number, 855-935-8255. Give us a call, get your questions answered, and come see one of our classes for free.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Really, really important stuff is what we cover here. Real money, but it's really life and how you can live a better life by getting the money part right. By saving early. Save early, save often. By saving it properly. And by not doing stupid things.
Yeah, a lot of people have been calling, by the way, just wanted to sign up for the classes. So we're going to have a little special thing for you at the bottom of the hour. But I do want to mention along those lines, because remember all the information you get about markets, money, all that stuff? There's two parts to that. Number one, the purveyors of that generally are doing what? They want you to pay attention, because the longer you pay attention, the more money they make, right? Whether it's CNBC or what that works. Number two, the purveyors of products. If your money's at Merrill Lynch, they've got a great reason why it should be moved over to Edward Jones, right? That's their whole incentive. So to get you excited about something that's going on, that works in their favor. That's the exact wrong thing for you, the right thing for them. That's important to remember when all the headlines that you hear all the time about this. That's something you should pay attention to.
All right, I did the discount coupon. I did it that fast.
Oh, you're good. So that's something we need to give. What's his name again?
Should I give it? Yeah, I probably should give it to him.
Yeah.
You think?
Sure.
Yeah.
Derek,
okay.
That's it.
Derek.
I'm teasing him because he forgot he was supposed to bring me lunch as part of the deal. So I'll give him that.
Okay.
Yeah.
855-935-TALK is the phone number, but you can get an even better deal by calling and asking a question on the air, because we want you to tell us what's important to you, what's going on in your life. How do you find the right kind of advice? How do you deal with the market that we're in right now?
Is that case sensitive, by the way?
No, it's not.
Okay.
So give us a call, 855-935-TALK, 855-935-8255. So there's two ways. You call that number. We're going to inundate Derek with calls, aren't we?
Yeah.
So you can call that number, and Derek will give you a $5 off code.
Well, he was very excited to come here today because this way he wouldn't have to watch the AAU game from Iowa or something on TV. So you never want to miss that.
What's the AAU game?
You know, basketball, because he's a basketball guy. There's always a basketball game.
Oh, is that it?
Yeah. So
that's why he's so tall.
Yeah. Well, he played college basketball very well. Just down the road.
I wondered.
Here. Yeah.
Okay.
Mm-hmm.
Yeah.
Don't take him in the hallway with a Nerf hoops game. He will kill you, bro.
Does basketball make you taller, or is it just tall people get into basketball?
I think it's a rack they have out there. Anyway, so
crank 'em
I don't know.
All right.
It worked for him both times. Any rate, you were saying.
We got off on a tangent. And I totally forgot what I was saying. I think we were talking about the market.
Well, we were. And we were talking about the self-interest of the people that send out the information, because they really are. They're incentivized to have you watch or keep listening or watch their program or read their stuff, right? Because that makes them money. Or the reason to get you excited to do something is so you move your money from one place to another. This business is all about that.
What is, in my opinion, the single worst thing you can do if you're interested in money and investing and making money for the long haul? The worst thing you can do is watch CNBC.
But that's what people think. They think that's where the big ideas are. That's where the smart people are. And that's where the up-to-the-moment information is. I can go there at any time and find out, aha, it's time to do X because the market has done Y. Bingo.
No. See, but you just said it properly. The market has done Y, and they never say that. They say the market is doing Y, so this is why you should do X.
Exactly. And you raise a great point. Anyone who talks about the market, it should always be past tense. It's done that. It's not doing anything.
It can't be doing anything because whatever it's doing, it did before they could say it's doing it, and you don't know what it's going to be doing. And
I'm going to let you untangle
dizzy.
this. That's not going to be easy.
I feel like I'm Alice going down the rabbit hole. 855. Am I taller, shorter, drink this, eat that? I don't know. 855-935-TALK. Give us a call. Get free tickets to one of our future classes and get some really valuable information.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
It is the show devoted to your dough. I'm Don, that's Tom, and we want to make managing money so much easier, far less complicated, not confusing at all, because it shouldn't be. It seems like it's supposed to be, but that's Wall Street trying to convince you it is. And the key, well, one of the keys is finding the right kind of advice. Yeah, there's a period of your life when you can probably fly a little by the seat of your pants by getting like our simple 2-fund solution. But there reaches a point where your life becomes far more complex financially. When you start getting into setting up trusts and building financial plans and creating income streams in retirement, making sure you have enough money to get you where you need to go. And that's when it's time to hire someone, a professional, to do it. And there are lots of people who consider themselves professionals.
And they're not. There's professional salespeople. So a new academic paper out that looked at this conflict, which it is, between people that have a legal, by their registration requirement to put your being the client's interest first, versus
they
those.
Call them fiduciaries.
They call them fiduciaries. And then the rest of the industry that has to use suitability.
Yeah, it's called the suitability standard. And just to tell you just a little bit about that, the suitability standard doesn't mean it has to be the best investment for you or even the right investment for you. It merely has to be suitable.
And if you're just
what is suitable?
Finding us for the first time, this has been a debate for the last, really since the Great Recession, about trying to fix this and make everybody have to treat clients the same way. That's not going to happen. That's, down the road. Who knows? I don't think it'll happen in my lifetime. So then there's all these people that are duly registered. They're registered as both a registered investment advisor that does have the fiduciary responsibility and as a broker-dealer, which only has the suitability. So a new study out, academic work from Northeastern University, that finds that dual registrants, those people who are registered as both, have numerous conflict of interest that arise from cross-selling of insurance products, revenue sharing with third-party mutual fund families, and selling proprietary investment products. And if that's not enough, if that wouldn't be enough for you to think about, they also found that dual registrants charge an average of 2.1% on assets. And we've told you on this show many times, we don't think you should pay more than 2.1
on average.
On average. So that means there's a lot of people charging a lot more than that. And bless you out there, because I know many of you don't know, because you come and see us, you say, well, I'm working with this guy. And then we look into it and find out that it's far more. In fact, we'll talk about a mutual fund a little later today, a bond fund that's charging 1.5% a year. There's no reason I can see of to use somebody who's duly registered ever. Why would you put yourself at risk? And this study shows even more reasons not to do that.
But bear in mind, these dual-hatted registrants, and the SEC actually refers to them at times as dual-hatted, like they have
they
hats.
Have two heads?
No, they have different hats they put
okay.
on. I have best interest hat, the suitability hat.
Right.
These dual-hatted advisors will claim that their dual registration confers benefits to you, the client, because it allows them to do more things with your money. Well, sometimes I have to do that stuff that's best for you, but at other times we can take advantage of hot deals and special deals that no one else can get because I don't have to do what's right.
Well, and they also charge that for smaller investors, it makes sense to have a broker-dealer relationship, because and you could run the number yourself. If you have less than $100,000, the advisor doesn't make enough, but that's okay. If you go
Right.
to Ed
No, it's
Jones and you have $5,000 to invest in a Roth IRA, and they can charge you 5% then the
5 to
advisor
5
can
and
get paid.
3/4.
Right, they can get paid to do that. I think that's a poor way to begin your investing relationship, but they can make that argument, I guess.
Right. But that's where we make the argument that, while you may not be a candidate for a fiduciary advisory firm, because for most firms, a $100,000 account is going to gross $1,000 a year, or maybe a little more. And then, you've got all the costs and the people to pay. You can't do it. But the reality is, that's why we have things like the two-fund solution, where you got the two Vanguard funds. You can start with that when you're accumulating. And then later on, when you get to that $250,000 or so, or $1 million that some advisors requires a minimum, you can then move over to these fiduciary advisors and get advice that's truly in your best interest. And I want to come back and talk a little bit more about these dual registered guys.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
855-935-TALK. That is the phone number to be a part of the show, to get answers to those really important questions involving real money. We call the show Talking Real Money because that's really what we do. 855-935-8255. Call and ask a question just to get the answer, or call and ask a question and get free tickets to one of our classes.
Which are coming up fast, September 17th, 18th, and 21st, just around the corner.
In
yes,
Tacoma, Linwood, and Bellevue.
You nailed it, man. Yep.
We were talking about dual registered advisors. And the vast majority of investment professionals in the United States are dually registered. A large percentage. There are many more who are insurance-only people or broker-only people who don't have the registered investment advisor designation in addition. But there are a lot of them. And a couple of years ago, the SEC, the Securities and Exchange Commission, started to work on rules to regulate those broker-dealers a little bit better, to try to make it less confusing for consumers. They failed miserably in that regard, but they tried. And they took comments from a lot of groups out there, individuals and groups, the brokerage industry, of course, having maybe the largest influence. But there's a group out there, maybe one of the highest designations an investment professional can get is CFA, Chartered Financial Analyst.
These are people that analyze stocks, they look at companies, they look at business, and they've been trained to really dig into the numbers to see. The part I struggle with is because what they're going to do is say, here's what's going to happen in the future. But
a lot of them,
smart people.
Most of them work with the brokerage industry. A huge number of them. But their CFA Institute wrote a letter to the Securities and Exchange Commission in 2018 about this very issue. And let me just read you a little of this. We believe investors typically associate the titles advisor and advisor with an O with registered investment advisors. Therefore, we agree with the SEC that it's important for retail investors to better understand the distinction between investment advisors and broker-dealers. But we find the proposed restrictions that pertain to dual-registered, dual-hatted professionals confusing and unlikely to be understood by investors. And their suggestion? A simple and straightforward approach would be to require broker-dealers to call themselves brokers, not advisors, in marketing materials and communications with clients. Likewise, their registered representatives should refer to themselves as brokers or salespersons.
How about insurance people?
But see, that's the problem. The new rules were supposed to make the term advisor
mean something
more understandable, mean something, to codify it. But they failed totally, utterly, and completely to do so. The term advisor should be only be used by someone who is required to give you advice that is in your best interest as a client. And that's not the way it works. So you, the client, are further befuddled by stupid, complex laws written by the people who take advantage of you and rob you blind in many cases.
And we know survey after survey shows that most of you listening today don't know that most people in this industry do not have to put your interests first. Most of you don't know. I mean, people are always shocked when I tell them, no, they could sell you whichever product is suitable. They do not have a requirement to put yours, the client's interests, ahead of their own.
Well,
People
that's
are
one of the
shocked.
things I found fascinating with the class I just did on fiduciaries on how to find it. And I said, how many people out of the 1.1 million people who call themselves financial advisors out there, how many of those do you believe are always required to do what's right for the client? And most people think it's most of those.
Yeah. And it's the exact
The
opposite.
number that it's worse than you would imagine. Just go ahead at home and guess in your head. You're probably guessing, okay, well, if they say it's that bad, maybe it's 50%.
Yeah.
Or maybe 25%.
Nope.
Okay. Worst case, 10%.
Nope. Keep going.
The
Keep
real
going.
number.
Keep
Get this.
going.
Let's assume for a minute. How many of you know 100 financial advisors?
I hope not that many of you, but
No,
okay.
I don't. I would imagine that not
know
a
that I
soul
know
listening
many.
to this.
Yeah.
I don't know 100. I couldn't name 100 investment advisors, financial advisors, I mean. And yet, if you know 100 financial advisors, the odds are okay. They're reasonably good that you know one true fiduciary.
1 out of the 100.
There's only, because 1 out of 100
Oh, still shocking.
are required to act in your one out of 100
Yeah.
people.
So
That's
line them all up,
pathetic.
and you got to find the 1 out of the 100. Not
Talk
easy to
about
do.
a needle in a haystack.
Needle in a pile of needles. That's really no. I mean, that's basically impossible. I mean, but it always gets back to because what people are going to say. Okay, how do I find somebody then?
Well, I'll tell you.
Yellow pages, right?
Wrong.
Somebody
still have
left
Yellow Pages?
Somebody left one like 6. Now they all do is throw them on your sidewalk. Somebody threw one out, my house.
I
6
remember.
months
I mean,
ago.
I'm old enough to
I
remember
know,
having
but
them in
somebody
the
still-
drawer.
And I live in
you'll-
a somewhat remote place, so they're still apparently delivering
But
them. I immediately put it in the
honestly,
recycling bin.
I couldn't tell you how many years it's been since
Yeah.
I have opened a Yellow Pages.
Me too, by the way. Long time. So no,
I
I'm
really still.
being
But here's
facetious.
how
That's
you do
not
it.
how you do it.
And this is going to be part of the class we do in September. 1, ask them. Just ask. Are you always use the word always? Are you always required to act as my fiduciary? If they say yes, well, you remember what Ronald Reagan used to say: trust but verify.
Well, yes,
based
I
on
do.
that old Russian adage. Get it in writing.
And we have a
Tell
form. We
them
have a
to write it
form, right?
down.
We had a form on the website.
We have a form on the website.
you could take
the
your
advisor
advisor.
interview
Yep.
form at talkingrealmoney.com, or just have them put on their letterhead, I am always required to act in my
won't do
client's
it.
best interest, signed broker guy.
They won't do it.
They won't do it. They'll refuse. What does that tell you?
They won't refuse. They'll say, they don't let me do that here, But you and I know. I'll take care of you.
Right, because
Take care of you.
and
That's
here's
the
the
key
other
part.
problem. You know why you believe they're going to take care of you?
Because they're your friend.
They're so nice.
They're always nice.
Oh, they're so nice. I love that guy. He's so nice. That gal I work with my money, she is such a professional.
Think that through a little bit. If they weren't nice, would they be in the business of selling things?
Yeah, no.
No.
Can you
can't-
imagine?
You can't be a mean person and, try
Although I have
Just
one
saying.
interesting anecdote.
Yeah.
When I was
When I was Yes.
fallen young man in my 20s,
Making
working
some real
for
money.
Dean Witter, making real money.
Yeah, right.
I did have a boss, the manager of the branch,
Who was not
guy by
nice.
the name of Skip.
But he ran the
He
place.
was not.
But he didn't have to get
my
on the
gosh,
phone and beg people for money.
Yes.
That's a difference.
Oh, yes. No. He would get on the phone with his clients and yell at them.
Harangue.
What do you mean, no? You are going to buy this.
Yeah, right. That was
And
more
I'd go,
the style then. Yeah, that's true.
Does
I don't think that works so much anymore. Well, I haven't seen it employed. Let me put it that way. Or maybe I don't buy things at the right place or something.
Not at our firm. Although, you could go off the deep end and start yelling at clients. I don't know. Couldn't you? 855.
I can't think of anybody I'd yell at. I'll work on the list. See what happens.
You like all our clients.
I do.
They're really nice people. It's maybe those brokerage firm clients are just meaner. You have to yell at them. 855-935-TALK is our phone number. Give us a call.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
If you find yourself asking the question, what should I do with my money now? If you have no idea what to do in the future and how to build the wealth you need and how to create an income stream and how to find the right advice, come to one of our classes. Real Retirement Roadmap coming up in September in Tacoma, Linwood, and Bellevue. And you can get discount tickets now at talkingrealmoney.com, talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.